cryptocurrency is going to change everything. You can't afford not to know about it. But what exactly is cryptocurrency and how does it work? In this video, we have debunked all the myths that are associated with cryptocurrency and how exactly blockchain works at its core. We will discuss what a cryptocurrency is and how it came into existence. We'll also talk about the non-fungible token, NFTs, and their implications for you. But before we get started, make sure to hit the subscribe and like button is greatly appreciated. Let's jump right into it. Cryptocurrencies such as Bitcoin, Ethereum and Cardano are revolutionizing the way we invest, bank, and use money. Cryptocurrencies, at their heart, are typically decentralized digital money intended to be used over the internet. Bitcoin was the first cryptocurrency and remains by far the most popular. Since its debut in 2008, Bitcoin and other cryptocurrencies like Ethereum have grown in popularity as digital alternatives to government-issued currency. The most popular cryptocurrencies are Bitcoin, Ethereum, Bitcoin Cash, Litecoin, Cardano. Other well-known cryptocurrency choices include EOS, XRP, Tezos, Zcash, etc. Others are similar to Bitcoin in terms of functionality. Some are based on different platforms with extra features than only money transfer between locations. The revolutionary potential of crypto is that it allows value to be sent worldwide, quickly, and at little cost, without the need for a middleman like a bank or payment processor, such as exists in the conventional banking system. Cryptocurrencies are created and regulated by nothing more than a network of computers running free, open-source software. They're governed by peer-to-peer networks made up of machines. In general, anybody who wishes to take part is welcome to do so. How is cryptocurrency safe if a bank or government isn't involved? It's safe thanks to blockchain, which verifies all transactions. A blockchain is a public ledger that records Bitcoin transactions, much like a bank's balance sheet or ledger. Every currency has its own blockchain, which is an ongoing, continuously verified record of every transaction ever completed using that currency. Unlike a bank's ledger, a crypto blockchain is available to everyone in the network of users. Here are some fundamental concepts about cryptocurrency. Concept number 1. Crypto safeguards your identity. The potential for crypto to transform global finance is enormous. It can do so by, among other things, allowing people on the other side of the world to conduct business with you as readily as they would if you were in the same room together. When you use cryptocurrencies to pay for goods and services, you don't have to supply unnecessary personal information to the vendor. This implies your financial data is safe from being passed on to third parties such as banks, payment providers, advertisers, and credit rating agencies. There's also little risk of your financial data being intercepted or your identity being stolen. Because your cryptocurrency holdings aren't tied to a bank or government, they are accessible to you wherever you go or what happens to any of the world's major intermediaries. Concept number 2. Every transaction is public. Every transaction on the Bitcoin, Ethereum, Cardano, Tezos, and Bitcoin Cash networks is publicly available. This eliminates any possibility of transactions being tampered with, money supply being altered, or rules changing during the game. Concept number 3. Transactions are irreversible. Irreversibility. Unlike a credit card payment, cryptocurrency transactions are non-reversible. This significantly lowers the risk of fraud for merchants. For consumers, it has the potential to make shopping more affordable by eliminating one of the most common complaints made against credit card companies: high processing costs. Concept number 4. It's meant to be secure. The Bitcoin network has never been hacked. Cryptocurrencies are made safer by having open-source core software and permission-less architecture, which allow numerous computer specialists to look at the network's security from every angle. Now, let's talk about NFTs, non-fungible token. In the crypto industry, one of the fastest growing sectors is NFTs. NFTs are currently shaking up the blockchain and crypto world and has taken over the world of gaming and arts. But what are they, and how do they actually work? Let's jump right into it. Okay, now, whether NFTs are a speculative fad or a new possibility for the world of artists or creatives in general, they continue to sell for a lot of money and keep making the headlines. That their longevity is debated doesn't mean they won't sell. They are still selling. If you're still confused or want to brush up on what NFTs are and how they work, you are just in luck. This video covers the definition of NFTs, how they work, where you can buy them, and how. Not to mention an added slice of some of their controversies. Maybe a huge slice, but you just have to find out. What are NFTs? NFTs are an acronym for non-fungible tokens. And non-fungible means they are not replaceable. You will get the hang of this very soon. NFTs or non-fungible tokens are a set of digital assets that have smart contracts. These smart contracts contain the recording of identifying information. These identifying information hidden in NFTs are totally non-interchangeable and unique units of data, and they are stored on a digital ledger. This digital ledger makes use of blockchain technology to establish proof of ownership. NFTs are like physical arts, so they hold value as physical arts do, even though they are collectible digital assets. If you have ever wondered if NFTs are like Ethereum or Bitcoin, or any other crypto, then you are on the right path. They are, in fact, like them. However, they are completely unique and, unlike them, cannot be exchanged for another, which makes NFTs non-fungible. Non-fungible tokens are not just pure currency. They are a little above that. They store some sets of extra data that take them above pure currency, bringing them into the realm of anything. Anything higher than pure currency. Any digital file that can easily be reproduced can be stored as an NFT. This is to help with identifying the original copy. Examples are seen in the cases of arts, memes, photographs, videos, music, and even tweets. Literally, anything that is unique can be made into an NFT, and made to store value digitally, turning them into digital collectibles. Before we continue with how NFTs work, note that they are not divisible. You cannot divide NFTs. You either have the whole package or you have nothing, even though this is bound to change in the not too distant time. How do NFTs work? To understand how NFTs work, you might want to first know how the blockchain works. But why do you need to understand blockchain to understand how NFTs work? Simple. Remember the ledger we mentioned before? The ownership and the unique identity of an NFT are verified by that ledger, which is a blockchain ledger. But you wouldn't understand it if you didn't know what the blockchain ledger is. The first blockchain ledger that NFTs were launched on is the Ethereum blockchain. Although as we speak, lots of other blockchains support them, including Bitcoin Cash, Flow, and several others. NFTs come in original file formats like MP3, GIF, JPG, JPEG, or any other format, and whichever format it comes in, the NFT identifies it and can be sold or bought like any other type of physical art. And like physical arts, the market demand determines the price of an NFT. NFTs work by allowing detailed attributes to be added to the smart contracts. Attributes like the owner's information, security files, and rich metadata. The ability of NFTs to prove digital ownership immutably is a crucial development in the evolution of the crypto world. And though it holds all these awesome prospects, there is no denying there are or will be limitations. But that is a different story. So you know what NFTs are and how they work. Now, don't go thinking that only well-known artists can cash out huge from NFTs. Even an anonymous group of unknown art enthusiasts can. Take, for instance, the Beeple sale that sold for $69.3 million. Or the Rainbow Cats GIF that sold for $690,000. Amazing? You bet. NFTs are also used in the gaming world for in-game purchases, allowing gamers to own assets they buy from the games. Then again, some brands use NFTs, like Taco Bell, and there is the US Basketball League (NBA). Let's not forget about tweets. Do you know the tweet of Jack Dorsey, Twitter's co-founder, sold as an NFT for $2.9 million? If you think that was incredible, know that a digital home created by an architect and video game software was sold for $500,000. The range of people who use NFTs does not end here. It goes on and on and on. So, in a nutshell, NFTs are used to differentiate digital assets from each other to prove their scarcity and their value. They can be used in ticketing for events in games, for music, videos, or even fashion brands. The uses of NFTs are quickly evolving to meet the evolution of the blockchain and cryptographic world. So leave a comment about your thoughts on cryptocurrency and NFTs. Also don't forget to subscribe and turn on the notification bell for more videos like this one. Thanks for watching.